Joining us to discuss is the former Reserve Bank of India governor, now professor of finance at the University of Chicago, both Booth School of Business, Raghuram Rajan. Great to see you. Thanks so much for joining us. I mean, first simple question, do you think we are at that turning point for the US? And do you think we'll get as much as the market's pricing, 100 basis points cuts by the end of the year?
Well, first, I think we are at the turning point. I think the labor market report next month will give us a little more certainty, which is what the Fed is waiting for. I think we will start seeing cuts in September. 100 basis points, I think it depends on how severe the slowdown is. Right now, it seems like the beginning of a slowdown. And I think the Fed will want to have more of a sense that this is a more serious slowdown for it to start cutting at the rates that the market anticipates. But, certainly a 25 basis point cut in September seems to be baked in unless the labor market report in September is very strong.
You had a great op-ed earlier in the week in the FT, and you mentioned there the size of the slowdown that the U.S. might experience. With the op-ed in mind, stepping back a bit, I just wondered your view on the fact that there hasn't been an extended recession. There was obviously the pandemic short, sharp recession. There hasn't been an extended recession in the US really since the 2008 period. Is that something that worries you, and as if there's something building up to come that we might not be pricing in yet?
Well, certainly when you look at the markets, the visible parts of the markets don't seem over-leveraged. You're seeing, housing, for example, a lot of people in long-term mortgages. You are seeing household debt come down as a fraction of GDP ever since the global financial crisis. And corporate debt also, with a few exceptions, is reasonable. The question is, what is the leverage in the parts we don't see? Now, typically, what happens with a recession or financial turmoil is leverage gets cleaned out. We saw that with the global financial crisis, but it's 16 years since that happened. And the question is, how much leverage is there that is hidden? We saw an example of that in March 2023, when we found that the medium-sized banks were over-leveraged with demand deposits, which had built up during the period of QE. And it took the Fed to come in with all guns blazing, as well as the Treasury to implicitly insure all banks' uninsured deposits to calm that down. There were 22 bank runs, according to a Fed report at that time. So the question is, how many other places has leverage built up, and what do we need to fix that? I certainly think that is something to be concerned about at this point.
Right. And Raghu, what would have to happen? What would be a potential catalyst to uncover that hidden leverage? Is it a global crisis? Is there anything on the landscape right now that worries you?
Well, I think if you look at risks around the world, certainly the wars and how they progress is an important concern. But probably the biggest concern in front of the public is what happens with the U.S. presidential election. Both the election itself, is it smooth? Are the results accepted? But also beyond that, the policies of the new administration, clearly they differ considerably across the two candidates. And what gets implemented could cause a lot of turmoil.